Think about it for a second. What would happen if every roadway in America had an AI brain, quietly watching, understanding, and optimizing traffic? What if that same tech could help first responders save lives faster and do it using smart data instead of physical sensors buried in the road? Sounds like science fiction, right? Especially now with federal smart city and transportation funding ramping up after recent infrastructure bills. This tech trend is accelerating quietly while Wall Street chases shiny headline stocks. But that's exactly the kind of infrastructure revolution quietly sliding under the radar. And here's the kicker. This isn't about some flashy big cap stock everyone already owns. This isn't about a household name. This is about a small NASDAQ stock, trading near $1.10, building the future of transportation intelligence from the ground up. That's right, not a meme stock, a real tech play on infrastructure and AI. I've tracked plays like this for years, and opportunities like this rarely sit still. If you stay with me for the next few minutes, I'm going to paint that picture, down to the nuts and bolts, and show you why this tiny machine intelligence play matters way bigger than its price tag suggests. This isn't about a penny stock. It's about adding a small, controlled, asymmetric position inside a disciplined long-term portfolio. Pause for a second and follow this logic. What if smart infrastructure, the kind that powers cities and logistics, is the next trillion-dollar runway? What if you could spot that before most investors even fully grasp the idea? Historically, similar small tech plays tied to infrastructure, like early cloud computing firms, delivered massive gains once adoption hit the mainstream. This is about being disciplined, patient, and ahead of the crowd, not chasing hype. Think about big infrastructure shifts in history: railroads, electricity grids, the internet itself. At first, most people didn't see them coming. Then suddenly, everyone does. That's because humans are pattern seekers, not pattern anticipators. So I want you to do two things with me. Slow your brain down, and then zoom out with me for a moment. The world is investing trillions into smart cities, smart highways, and AI analytics. Not because it's trendy, but because the data layer of infrastructure is what unlocks efficiency, safety, and economic value. So the question isn't, is this technology cool? It's, can this tech become a recurring revenue backbone for governments and enterprise? That's a different ballgame. One where missing the trend isn't just costly. It's a lesson in regret later. Time does the heavy lifting here. We're focused on real value and long-term tech adoption, not get-rich-quick thinking. Now watch what happens next. Early movers often get the upside. Latecomers get the lesson. Okay, let's officially introduce the star of today's show. Wrecker Systems Inc., trading on NASDAQ under the ticker REKR. Market cap approximately $95 million. Headquartered in Columbia, Maryland. Wrecker is building systems that literally watch roads and vehicles using AI-enabled computer vision and machine learning. Here's the story. Most Wall Street doesn't talk about. Wrecker isn't selling more of the same old hardware. They're selling data, recurring, contract-driven, sticky data, to transportation agencies, cities, and public safety orgs. Sound familiar? Think of it this way. Just like cloud providers sell storage and computing power, Wrecker sells traffic intelligence and safety insights from real-world infrastructure. It's like combining the power of AWS's data services with smart city hardware, but tailored for the real world, not just demo videos. Their key platforms include Wrecker Discover, Wrecker One, Wrecker Command, and Wrecker Scout, all designed to turn roadways into data engines. Here's where it gets interesting. In 2025 alone, they've landed major multi-year contracts, including a statewide agreement with the Georgia Department of Transportation, valued at a minimum of $50 million over 8 years, with potential to exceed $100 million. That's real recurring revenue potential. Pause for a second and follow this logic. A company trading around $1.10 per share with real multi-year government contracts. That's not just pilot projects. That's infrastructure rollouts. And it's spreading. Deployments in Arizona, Colorado, Florida, New Mexico, New York, South Carolina, building a geographic footprint that could scale nationwide. Now, let's be honest. Infrastructure contracts take time to roll out, and government budgets move slowly. Missing this adoption trend could leave late investors scratching their heads years from now. When you connect the dots, AI plus public safety plus data as a service equals sticky recurring model, exactly what investors chase in enterprise tech. I'll say it again. This isn't random surveillance tech, it's infrastructure intelligence. And that's a much bigger narrative than a penny stock ticker. Here's why this matters. If this adoption trend continues quietly, early investors may see multi-year structural upside before mainstream attention arrives. All right, let's ground the story in the numbers. As of last reported figures, revenue for 2024 hit approximately $46 million, a 30% plus increase year over year. They reported record quarterly revenue of over $14 million in Q3 2025, and gross margins expanded above 60%. Revenue growth plus improving margins equals operational leverage. Yes, the company isn't profitable yet. Net losses are real, but operating expenses are down, and adjusted EBITDA losses are shrinking. In many early-stage tech companies, that's exactly the journey. Growth first, profitability later. Let's look at 3 potential paths for this company. In a conservative scenario, revenue grows 20% per year, margins expand modestly, and valuation re-rates slowly. In the base scenario, revenue grows 25 to 30% annually, margins exceed 65%, and the market values it like a SaaS/data play. In a bullish scenario, multi-state adoption accelerates, recurring revenue hits $100 million plus in 5 years, and multiples expand significantly. Compare that with peers in smart infrastructure or AI software. REKR's current price-to-sales ratio sits quite low versus traditional enterprise SaaS companies, where multiples of 10x plus revenue are common. Think about it for a second. This $1 stock is capturing sticky, multi-year government revenue that rivals mid-cap SaaS firms in value creation. Now listen, I'm not here to hype you with made-up price targets. But here's what independent analyst chatter suggests. 12-month median target, $3 to $4 to 180% to 260% potential upside from $1.10 today. Catalysts include revenue growth, margin expansion, and additional state contracts. Why this is a better long-term opportunity. Recurring contracts equals predictable revenue. Government adoption equals sticky, low churn. AI plus public infrastructure equals structural trend, not hype. Here's why that price speculation makes sense numerically. Revenue under $50 million, but growing steadily. Gross margins above 60% leads to incremental revenue, contributes disproportionately to bottom line. Recurring contracts equals operating leverage magnified over time. Multi-year optionality. If REKR captures 5 to 10% of U.S. smart traffic market, implies revenue could exceed $500 million in 5 years. Compared to software firms, Wall Street often values recurring margin-rich revenue highly, even at small absolute revenue. Asymmetric risk/reward is clear. Downside is limited by low market cap. Upside amplified by multi-year adoption. Viewed from a portfolio lens, REKR fits infrastructure plus data tech rather than speculative hype. It complements longer-term, structural investments, not day trades. Think about it. If you already own cloud data plays or AI software, REKR adds exposure to public sector digitization. Diversifying risk and thematic exposure. Compare it with peers. REKR trades at lower multiples than private cloud infrastructure providers, but delivers recurring government revenue. Sector growth forecasts: smart traffic systems expected to grow 20 to 25% annually over next decade. REKR positioned early. All right, let's wrap this up. Today, we unpacked why REKR, a small NASDAQ tick under $2, deserves attention as more than a penny stock. We saw real revenue growth, improving margins, and multi-year contracts that could anchor future earnings. We framed valuation logically, not as hype, but as structural opportunity. So here's my final question. If this stock doubles or triples over the next 12 to 24 months, will it be because of AI adoption or infrastructure demand? Think about that. Then tell me your take. Would missing this quietly growing adoption trend hurt your portfolio years from now? And if you got value from this breakdown, like, subscribe, and drop a comment. Tell me what stock you want me to deep dive next. Until next time, think deeper, hold discipline, and let long-term trends do the heavy lifting.